Stocks pulled back for the day, taking a little bit of a breather from their up moves after the weekly vertical crossover. And of course, we see that bonds are up and gold is up, as one would expect. If you stay tuned, stay with us until we get to gold. I'm going to show you the magic of the gold weekly chart. It's almost a situation where you got to do something wrong to make a bad practice trade here, and it will be worth its weight in gold. Okay, let's go first to stocks. We're going to jump into the S&P 500. What do we see going on there? Well, of course, we had a weekly vertical crossover at the end of the week on the 25th of January. Same with the Nasdaq 100. We're now going to 5 weeks of up movement. This is one of the stronger weeks, maybe not quite as strong as the second week of the rebound on the week ending the 18th of January. But so far, still a nice up week. Derivative oscillator gaining upward momentum. Price percent oscillator heading up nicely. We go from the weekly to the 2-day. Now, if you will recall, the last full 2-day candle drew itself on the 6th of February. What we see now is a doji forming. Doji formed back on the 2-day candle on the 29th. Does that mean the up move is over? Not necessarily. Derivative oscillators getting short in the tooth. Price percent oscillator is flattening out. We'll see how this candle draws by the end of the day on Friday. We've not penetrated the 2-day trend line. Remember, warning bells go off when you start seeing green candles disappear, when you see penetrations of various trend lines. The 2-day is typically the first. When the weekly starts getting penetrated, even more warning bells. And of course, the biggest warning bell of all is always a vertical crossover, whether that's on the 2-day, the weekly, or the 4-hour. So we go from the 2-day to the 4-hour. What do we see there? Well, we see two strong down candles down in the morning, down some more in the afternoon, but leveling out a little bit. Let's see. It looks like things ended. The last was 269.32, the high 271.24. So again, price movement still above that 2-day and well above the weekly, but you can see that the derivative oscillator gaining lots of downward momentum. Price percent oscillator is decidedly headed down. That crossover going down took place after the morning candle when it ended. So if you were in that play, you got warning bells going off now telling you to be very, very careful. If you're still in positive territory, don't lose what you've gained. If you've gone negative, then assess what it is you're doing on that practice trade. We go from the S&P 500 to QQQ. What do we see there? Nice strong up candle still there. Derivative oscillator still going up nicely. Price percent oscillator going up nicely. We go from the weekly to the 2-day. And of course, we again have a doji forming. It's not a finished candle yet. If it's an up day on Friday, then of course all that could be over. It could turn into a green candle. We see the derivative oscillator losing upward momentum. Price percent oscillator going flat. That, of course, is not a good sign, but hasn't crossed over, hasn't penetrated the 2-day yet. And then we look at the 4 hours where we see the problem, crossover, enough downward momentum to have a price percent oscillator crossover, and then in the afternoon, derivative oscillator crossed over. So those are problems for that trade. If you're still positive from your jumping in point, then of course you want to assess to go ahead and potentially pull that and wait for another crossover going back up if you haven't already cashed out. So we go from the weekly, from the Qs, the stocks, we're going to head from there, as we always do, to bonds. And one would expect bonds to be up when stocks are down. Why? Because bonds and gold, the whole reason we track those guys is because many times they are places, they are ETFs that the market will move to, where the money will move to when stocks aren't doing so well. And when we see things working inverse like this, makes us feel a little better about the market functioning properly. We see that 20-year bonds up for the day, derivative oscillator losing upward momentum. That price percent oscillator is heading up. We have for the week, what's drawing right now again is it's a green spinning top, means indecision tending up. We go from the weekly to the 2-day, And we look at the 2-day chart, and of course, because of the up movement, 0.66%, we see a nice green up candle, derivative oscillator losing downward momentum. That price percent oscillator is heading up. Hasn't crossed over yet. We'll continue to keep our eye on things and see if that does occur. That means, of course, currently we don't have a trade in bonds, practice trade. And we saw the 4-hour chart cross over in the morning, same time that the S&P and the Qs crossed over going down, and then more movement up in the afternoon. That's where we are on bonds. Now we're going to go to gold, up 0.24% for the day. And what I promised you, we'll talk about that first. Look at the beauty of our weekly chart. Have many of you guys, we talk about total trading charts. Have you seen how beautiful our weekly chart is in gold? If you're a gold bug, do you notice that about every time our weekly chart crosses over, gold goes in that same direction for many weeks? Just about every single time. What does that mean to you? That means that's a practice trade you probably want to get into. You want to check out gold and see how long this goes on. You can find time after time after time after time, where when gold crosses over, that next week you have a jumping in point and gold moves for weeks. Now, is it always perfect? No. That's why we have our 2-day chart, our 4-hour charts. That's why we have trend lines and warning bells and all those things. But think about that. If you were a person that was interested in tracking gold, it would give you a great reason to practice trade it again and again and again. When gold's up, you can practice trade GLD. When gold is down, you can look at something like GLL, or a put on GLD, or just not be in gold. Just buy it cheap and sell it high in your practice trades, and do that over and over and over again. Now you notice I'm being very careful in saying practice trades. I am not giving you market advice. I'm not qualified to do that. I'm not trying to do that. I'm not paid to do that, and I'm not doing that. I'm just pointing out the obvious here. The reason you need to learn to read these charts. How many times I got to say that? And I know a lot of you take that to heart, and I appreciate all of you who do. So what do we see going on in gold? Well, since it crossed over going up all the way back, in fact, our weekly vertical crossover occurred back on the week ending the 5th of October. Went up for 3 weeks, down for 3 weeks, sideways for 2 weeks, and then has been shooting up ever since then. If you'd have jumped into gold that following week after the crossover, somewhere around, I don't know, let's say 113. Oh, let's say the worst spot you could have gotten in, 116.04. Best spot, 111.90. So we'll just say 116. Okay, where did it stop? What was the high over the last few days? Or the last couple of weeks, 125? So let's see, is 125 more than 116? Yeah, it's a lot more. Is that not beautiful? That's beautiful. That's beautiful in anybody's book. And you can go back in time, and we talk about backtracking and seeing how things work. I encourage you to do this not just on gold. Go look at your favorite stocks, your favorite ETFs. See if they chart. And people say all the time, well, I want to chart so-and-so. And I look at it and say, well, good luck. I can't find anything to chart there, because some things aren't chartable. But the things that are, like gold on the weekly chart, you might want to pay attention to that. Just might want to pay attention to it and practice trade that. That's my advice for the day, and I think that's worth its weight in gold. And that is the reason you need to subscribe to this channel. That is the reason that we would love to have you be a Patreon sponsor. And if you haven't bought our book, buy that too. You can see Patreon links in the show notes. And with the Patreon sponsorship, you get all sorts of stuff. Depending on your level, you can get a free book. Heck, you can get a free year's supply of our trade worksheet, our trader's journal. And of course, we have a monthly call-in Q&A that we had yesterday, and we also have a review of the stocks and ETFs that our Patreon supporters find interesting. So, and all sorts of other stuff. Short chart training, quarterly chart training. you name it, we got all sorts of good stuff for you. So all that said, appreciate your help. And of course, your help keeps this going every day because this is not free to do and it does take up a lot of my time. And I do appreciate all the kind words and support, my friends. Thank you so much. So let's jump in. What do we see going on gold? Well, this week so far, even though up for the day 0.24%, when we look at the prior week and the prior candle, it topped out much higher on its trajectory as far as the wick goes than this week's candle. So we're really seeing a sideways slide more than anything else. You can tell also the derivative oscillator losing momentum, price percent oscillator losing some momentum. Was an up day for gold. I'm sorry, was an up day for gold today, but the week is losing that momentum. So we go from the weekly to the 2-day, and of course that's where you see that sideways slide. You can see where things topped out back on Thursday the 31st on that 2-day candle, and then have really been sliding sideways, tending down since then. First day of this latest 2-day candle is, of course, a red down candle with a wick on the bottom. Price percent oscillator crossed over, is crossing over, isn't called yet because the 2-day candle's not finished drawing. That'll happen to close the market on Friday. Derivative oscillator going negative. If another up day, things could happen. You might say, wait a minute, you just told it was an up day. This is the first day of a 2-day candle. Why is it down? Because we use Heikin-Ashi candlesticks. Heikin-Ashi candlesticks, I think 105,000 people have taken that training, offer it for free. Just go to our website and look under the trainings. You'll see it there. You'll also see it at our YouTube channel. When you're at the YouTube channel, subscribe also. We appreciate your help with the metrics. And you will understand Heikin-Ashi candlesticks are different. Heikin-Ashi apparently means average pace in Japanese, and that's what we're tracking. So we go from the weekly to the to the 2-day candle. And what do we see? Well, I'm sorry, that was the 2-day candle going sideways and down. I'm sorry. Been a long day, my friends. Okay, we go to the 4-hour next, of course. That's where we can see some of the up movement in the morning, a little bit of a pullback in the afternoon. We can see that the derivative oscillator about flat, price percent oscillator heading down still. So don't have a trade in gold at this point. If and when we see a crossover, well, if that 2-day confirms a crossover going down, then of course, even if the 4-hour rotates over, we don't have a trade. But if for some reason gold just popped, then, you might have a trade in the afternoon, a practice trade in the afternoon to look at. But again, folks, what to take away from today's training is look for total trading charts. Look for beautiful charts that work. Look for things that work over and over again for weekly vertical crossovers, for the weekly and the 2-day moving in the same direction, our second method of trading, and then a pullback on the 4-hour chart in the opposite direction, and then when it flips back over, a jumping in point. We trend follow, and big trends typically mean big virtual profits. That's what we want you to practice. That's what we're all about. Thank you for your support. Thank you to all of you who put money behind what it is we do here and support us. We so appreciate that. If you haven't bought our book, do so. We're in our 8th printing. We'll get that out to you, Charting Your Way to Wealth. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.